We're joined by CPA Bill Perryman with Perryman Financial Advisory. Bill, thanks so much for taking the time with us today. These are hard days for a lot of folks, especially lay people. And I'm just curious what advice you give to people who are taking a peek at that 401k today and feeling the panic.
Thank you, Jason. Obviously, nobody likes to see the market drop, and I know no differently than the average investor. I don't think this is a panic time. I think this is just an adjustment. I think it's a signal for the market to telling the Fed, we think you should have been cutting rates at this past meeting. I think it pretty much solidifies that they will cut rates on their next meeting on September 18th. I think actually the market is showing a 70% probability that they'll cut by even half a point. But I think that the Fed is waited a little bit too long, and the market is just signaling that. In addition to that, we've had an incredible first half of the year. I mean, just 2 weeks ago, we were hitting all-time highs. And I think there's just a normal market of backfilling. A lot of the traders are on vacation. Volume tends to be a little bit lighter this time of year, and so when there's bad news, it tends to be more of a free fall. But I don't expect this to continue long term.
Well, Bill, of course, rate cuts will probably be welcome news for a lot of folks out there. But when it comes to all of this uncertainty in the market, should someone hold off on taking out a loan until that rate cut actually does come through?
You may want to look at it. Typically, the rates will anticipate that. I mean, the mortgage companies will anticipate, but I probably would hold off at least until we see what happens in September. I think you may see a little bit better real estate rates on the mortgages after that first cut. But I think that the market is signaling that they're probably at least about a point and a half cuts coming in the near future.
Wow, that would be significant for sure. Bill, let's talk about, and I love that you gave the perspective that we've had a lot of very good days in the market too. We've had a real run up. We talk about it on days like this when it crashes down. How long do you think it might be before we see this settle out a bit, for some of this volatility to go away, and we see the market bounce back again?
Well, I think typically, the volume comes back, in September, late September, October. I think that gives us more stability. But I think that when we see that the cuts are coming, I think you'll see investors coming back in. I think one should look at this as a cautious time to take advantage of some of these sell-offs and maybe be cherry picking some of your favorite stocks. But once again, I don't think this is the beginning of a crash. I don't think it's the beginning of a deep, dark recession. I think we very likely will have a mild recession. But I don't think that this is going to be any, there's a lot of political uncertainty and certainty in the Middle East, but I don't think this is the beginning of anything major.
Well, Bill, we only got one more. What does this mean for the future of the economy?
Well, I think we will have maybe a mild recession, but nothing, I don't think it's going to be anything that's going to be major. And I think we'll come out of it pretty quickly. And as I say, the market loves low interest rates. And so when the Fed starts cutting rates, we're going to see money coming back in. And it makes stocks more attractive with lower rates. So I think that money will leave the bond market and some of the money market accounts, and it will flow into the stocks.
Bill Perryman with Perryman Financial Advisory. I know that on days like this, the phone can be ringing off the hook and the inbox piling up. So thank you for taking our call today and for maybe helping to spread a little bit of calm for investors who've got the jitters. Really appreciate it.
Thank you.